Hello everyone and welcome back to the channel. Robinhood stock is down today after its latest earnings report, and investors are trying to figure out whether this is just short-term volatility or is it a bigger warning sign. In this video, we're going to break down what Robinhood reported, what disappointed Wall Street, why the stock is falling, and whether this dip could be a buying opportunity. Robinhood just released its quarterly earnings, and on the surface, some numbers actually looked solid. Revenue grew year over year, and trading activity remained strong, especially in options and crypto. But here's the problem. Wall Street doesn't just care about growth. It cares about growth versus expectations. And even when companies grow, if they miss analysts' expectations or guide cautiously, the stock often drops. Today's report showed slower user growth than expected, mixed guidance for next quarter, concerns about sustainability of trading revenue where investors were looking for acceleration, and instead they got signs of stabilization. And in this market, not amazing often equals sell. There are four main reasons Robinhood stock is under pressure today. Revenue mix concern is one of them. Robinhood still relies heavily on options trading, crypto trading, payment for order flow. Those are high margin businesses, but they're also volatile. If trading activity cools down, revenue can drop quickly. Investors worry that recent revenue strength may have been driven by temporary spikes in volatility rather than sustainable growth. Another concern is slower user growth. Monthly active users and funded accounts are key metrics. If user growth slows, long-term revenue potential slows too. But Robinhood has been working to diversify into retirement accounts, credit cards, and advisory services, but those take time to scale. If account growth flattens, Wall Street starts asking, where does the next big growth wave come from? The third concern is forward guidance. The biggest stock movers often aren't the results, they're the future outlook. If management signaled caution about trading volumes, pressure on margins, or higher operating expenses, that's enough to spook investors. Stocks trade on expectations, and expectations might have been too high going into this earnings report. Something else to keep in mind is high valuation equals higher sensitivity. Robinhood is still considered a growth stock. Growth stocks fall harder when growth slows, guidance disappoints, or macro conditions tightens. Even a small earnings miss can cause a sharp reaction. Now, let's zoom out. We can look at the bigger picture. Robinhood has actually transformed a lot over the past few years. It's no longer just the meme stock app. The company has expanded into retirement products, launched a credit card, increased interest income, improved profitability metrics. In fact, rising interest rates helped Robinhood generate more income on customer cash balances. So fundamentally, the company may be stronger than it was a few years ago. But here's the key question. Is growth re-accelerating or stabilizing? Investors want to see strong net deposits, expanding assets under custody, continued profitability improvement, diversified revenue beyond trading. If those trends slow, the stock reacts quickly. Whenever a stock drops after earnings, investors ask the same question. Is this a dip to buy opportunity or the start of a bigger downtrend? I usually look at the 200 moving average to help me with the trend, but here's what bulls will argue. Robinhood is profitable, it has a strong balance sheet, it's capturing younger investors, and if long-term retail investing trends are still growing. Now, here's what bears will argue. Trading activity is cyclical, crypto revenue is unpredictable, user growth may be slowing, competition from larger brokers is increasing. The stock's next move likely depends on market volatility, crypto momentum, retail investor activity, and next quarter's guidance. Here are the key things to monitor: monthly active users, net deposits, crypto trading volumes, margin trends, and any regulatory developments. If those improve, today's dip could look temporary. If they weaken further, pressure could continue. So here's the bottom line. Robinhood stock is down because expectations were high and the earnings report didn't fully deliver the acceleration investors wanted. We'll find out next quarter if the trend continues. I am not a financial advisor. This content is for educational and informational purposes only. You should conduct your own research or consult with a certified professional before making any investment decisions. Past performance is not indicative of future results. Some AI tools have been used to create, edit, or generate content. If you found this helpful, hit the like button and subscribe. Check out the link in the description.